Well, cloud data platform Databricks, number 3 on this year's CNBC Disruptor 50 list, turning heads as a new fundraise values the company at $134 billion. That's nearly double the $75 billion public market cap of Snowflake, one of its biggest rivals. Joining me now on a first on CNBC interview, Databricks co-founder and CEO Ali Ghodsi. Ali, welcome. Big numbers here. We've been talking about IPO possibilities for Databricks for a long time, but let's talk about revenue. You're right up against a $5 billion revenue run rate, growing at 55%. Could you still do that if you were public?
Yeah, I think so right now. But I think if the question was, if we had gone public in 2021 and stayed, public in 2022 when everything was going, down and, interest rates were going up, then I don't think we would have been at this growth rate right now.
Well, I mean, is that a reference to Snowflake? Because they went public right around then.
Many companies, but yeah, they were one of them. But there are many companies that ended up in that situation. So that allowed us to invest in, agents. It allowed us to do the database acquisition of Neon. So we have Lakebase. So, we would not have been able to do those.
How do you think your free cash flow compares? We do have a number for that in Snowflake, but we don't have it for Databricks. Talk to me about your cash management strategy, how that factors into your raise here and your vision for the future.
Yeah, so, we've said that over the last 12 months, we've been free cash flow positive. So, we're efficient business. But we're reinvesting it. We're not trying to produce lots of free cash flow. We just want to stay at this break even and invest it back in agents, in databases, Lakebase. There's this new category of applications out there that are being built. We call them data intelligent applications. We want to invest in that.
A lot of times companies will go public in part so that people feel like they're stable, they're enduring, they're in for the long term. Companies already know your name, clearly, by this growth. And right now, the market is at a place with data with AI where some are questioning if valuations are a little on the high side. How much does that factor into your choice of whether you go public in 2026?
Yeah, I mean, look, we will be public. I wouldn't rule out that we wouldn't be public next year, so I wouldn't rule that out. But, I don't want to also take the company public and then 2022 happens and then the market wants to have 30% EBITDA and, we can't invest in these. I mean, there's a huge secular shift happening. Like, no matter what happens with this AI, whether it's a bubble or not, people are not going to stop using AI. For instance, software engineers are not going to stop using AI for software engineering. This trend will continue. All that software that they wrote before is now cheaper to write. All that software needs a database that works well with the agents. That's what Lakebase is about. All of them will be building these applications. So I would hate it if the market forces us not to be able to invest in these growth areas and these innovations.
So how will you know?
Well, kind of see how the market is evolving. We were just fundraising, right? We just raised over $4 billion. And we talked to every institutional investor out there, right? The ones that are managing trillions of dollars of AUM. And the number one question they're asking is, do you think there's a bubble? Do you think what's going on? What do you think about these deals? So, those questions themselves
what did you tell
reflect people's psyches. Well, I focused it on our business, which is I think that there is amazing amount of automation that can happen, an amazing amount of augmentation of AI that we are doing with Agentbricks. I tell them about the use cases. At Royal Bank of Canada, we're able to build an agent that in real time, when an earnings call comes in, you'll like this, immediately gets the earnings calls, gets the previous earnings calls, get all the competitors' earnings calls, figures out what's happening in the market, and puts together, equity research report within 15 minutes. It takes the industry, as you know, 2 hours or, much longer to do that. And they can do it in the tone of the particular equity research analyst. So use cases like this, we just want to sort of continue delivering those. So I focus on that not so much, but they want to talk a lot about data centers and energy and how many gigawatts do we actually need and so on.
Yeah.
And, who knows?